The story of how the United States built its credit from scratch begins in a moment of financial chaos, one that could have unraveled the fledgling nation. It's a tale of visionary thinking, political maneuvering, and a revolutionary financial plan put into motion by none other than Alexander Hamilton, the first Secretary of the Treasury. In 1790, the United States was barely more than a decade old, struggling with debt from the Revolutionary War and with little trust or credibility on the international stage. But Alexander Hamilton, the architect of America's financial system, saw an opportunity to create something that had never existed before: a strong central financial system capable of building credit, stabilizing the economy, and putting the country on the path toward growth and prosperity. At the time, the United States owed more than $75 million, an astronomical sum for a young nation. The states had each borrowed money independently during the Revolution, and now they were burdened with the consequences. The Continental Congress had issued bonds to finance the war, but these bonds were nearly worthless, and the country lacked any established financial institutions to manage or control its debt. In this environment, Hamilton's challenge was clear. The United States needed a plan to manage and consolidate its debt to gain credibility in the eyes of both domestic and foreign investors. Without a credible financial system, the young country would struggle to pay off its obligations and attract investments. But Hamilton was no ordinary leader. With a deep understanding of economics and finance, he saw beyond the immediate debt crisis and envisioned a way for the country to not only survive but thrive. The plan he devised was nothing short of revolutionary. Hamilton's debt plan was bold. He proposed that the federal government assume responsibility for the debts incurred by the states during the war. This meant consolidating state debts into one national debt. His reasoning was simple but powerful. By centralizing the debt, the federal government would establish its authority and gain control over the nation's financial future. But it wasn't just about consolidating debt, it was about creating trust and credit. Hamilton knew that in order for the government to build credit, it had to be seen as a reliable borrower. So he argued that the country should honor its debts in full, paying back the bondholders at face value, even if that meant paying back some bonds at a higher value than they were worth on paper. This wasn't just about paying the money, it was about showing the world that the United States was serious, responsible, and capable of managing its finances. It was about building confidence in the U.S. as a new player on the global financial stage. This idea wasn't without its critics. Many of the states, especially those that had already paid down a significant portion of their own debt, were unhappy with the plan. They felt that they shouldn't have to foot the bill for states that had been more reckless in their borrowing. Some of the country's founders, like Thomas Jefferson, saw Hamilton's proposal as an overreach of federal power and an unfair system that would favor the wealthy elite over ordinary citizens. Despite the resistance, Hamilton pushed forward with his plan. He knew that this was a matter of national survival. He argued that without credit, the United States would never be able to grow or succeed. Credit was essential for trade, investment, and economic stability. Hamilton believed that building the country's credit was crucial for establishing the United States as a formidable economic force in the world. Hamilton's plan was about more than just debt consolidation. He also proposed the creation of a national bank, a central financial institution that would manage the country's finances, issue a national currency, and provide loans to businesses and the government. This bank, the first bank of the United States, would serve as the financial backbone of the nation. It would create a stable currency and lend the government the credit it needed to carry out its functions. This was an ambitious idea, one that would forever change the relationship between government and finance. The establishment of a national bank would also provide the government with the ability to borrow money more easily, setting the stage for long-term economic growth. But even this step was not without controversy. Opponents of the national bank, led by Thomas Jefferson and James Madison, argued that the Constitution did not give the federal government the power to create such an institution. They believed in a more limited federal government, with power resting in the hands of individual states. They feared that Hamilton's plan would give too much power to the federal government and to wealthy bankers, leading to inequality and cronyism. Despite the opposition, Hamilton's vision for the national bank gained support. He skillfully navigated the political landscape, using his influence to sway key figures in Congress. In 1791, Congress passed a bill creating the first Bank of the United States, marking a major victory for Hamilton and his plan. The creation of the national bank helped establish the credibility of the United States in the eyes of foreign investors. It also provided the country with a stable financial system, setting the stage for economic growth and prosperity in the 19th century. Hamilton's debt plan had worked. He had successfully transformed the United States from a nation mired in debt into a nation with a strong financial foundation. But Hamilton's financial plan did more than just stabilize the economy. It laid the groundwork for the United States to become a global economic power. The debt plan, along with the establishment of the National Bank, helped the United States build the credit it needed to borrow money from foreign nations and expand its economic influence. Hamilton's vision of a strong central government with a robust financial system was realized through his debt plan. He had succeeded in creating the foundation for the modern American economy. But his vision wasn't limited to just managing debt. It was about creating a financial system that would enable the country to grow and thrive for centuries to come. And while Hamilton's plan was controversial, it ultimately proved successful. It helped the United States establish the financial infrastructure necessary for its survival and growth. Without his debt plan, the United States might not have been able to recover from its early financial crises. In the end, Alexander Hamilton's bold financial plan helped the United States become the economic powerhouse it is today. His vision and determination laid the foundation for the financial system that continues to shape the nation. Now that Hamilton's debt plan had gained momentum and the creation of the first bank of the United States was firmly in place, it was time to see how these financial reforms played out in the real world. The effects of Hamilton's vision didn't just stop at stabilizing the U.S. economy. They had far-reaching consequences that would shape not only the nation's financial future but also its political landscape. The impact of Hamilton's debt plan rippled through the decades, influencing the development of America's financial institutions and its role in the global economy. Once the national debt was consolidated and the government had a reliable method for financing itself, the U.S. economy began to expand rapidly. Hamilton's plan provided the backbone for economic growth, which led to the development of a vibrant market for U.S. government bonds. The presence of the National Bank gave the government the ability to manage its finances more effectively, making it easier to conduct international trade and fulfill its obligations to foreign creditors. By the turn of the 19th century, the United States had successfully built a solid financial reputation. Hamilton's debt management strategy had transformed the country's economic standing, giving it the ability to borrow money on the global stage at favorable rates. This ability to access credit would prove crucial in the coming decades, as the U.S. needed funding to build infrastructure, pay for wars, and expand its territory. The creation of a stable financial system, however, wasn't without its challenges. As the country grew, so did its financial needs. The question of who should control the financial system remained at the heart of American political debates. Hamilton's belief in a strong central government was continually challenged by those who wanted to limit the federal government's power. This debate came to a head in the 1820s and 1830s, when the Second Bank of the United States was established. While Hamilton had created the first bank to give the federal government control over monetary policy, his opponents, such as Andrew Jackson, fiercely opposed the idea of a central bank. Jackson's battle against the bank ultimately led to its dissolution in 1836, marking a significant turning point in the U.S. financial system. Even though the National Bank was dissolved, the lasting legacy of Hamilton's plan endured. It had successfully established the principle that a central government should control the nation's financial system. This idea was reinvigorated later on, and by the early 20th century, the Federal Reserve was created to provide much-needed oversight over the economy and help prevent financial panics. But Hamilton's influence didn't stop at creating the financial framework of the U.S. His ideas extended beyond banking and debt management. Hamilton also laid the groundwork for the United States to engage in international financial markets. Through his careful planning, Hamilton helped the United States gain credibility in the eyes of foreign powers. His system of paying off national debts, even at a premium, sent a clear message to Europe that the United States was financially reliable. This reputation would play a key role as the country began to expand its economic influence worldwide. But the legacy of Hamilton's debt plan isn't just seen in the rise of the U.S. as an economic powerhouse. It also played a pivotal role in the development of modern financial systems. The idea of managing national debt responsibly, creating a central banking system, and building credit would go on to shape financial practices worldwide. Today, the mechanisms Hamilton established, such as the creation of the National Bank, the consolidation of debt, and the development of a stable financial system, are fundamental to the operation of modern economies. Hamilton's vision of a strong central financial system has been replicated in many countries, and the world now has a robust network of interconnected financial systems that are critical to global commerce. However, Hamilton's plan did not come without costs. It sparked political divisions that still echo today. The centralization of power in the hands of the federal government was seen by many as a threat to states' rights, and the battle over the role of government in economic affairs has shaped American politics ever since. His opponents, like Thomas Jefferson, who advocated for agrarianism and a decentralized government, viewed Hamilton's financial system as a path to creating an elite, aristocratic class. They feared that Hamilton's plan would only benefit the wealthy and not the common people. These ideological battles would continue to influence American politics, leading to the formation of political parties and the rise of the Democratic Republicans and the Federalists. Despite the criticisms, Hamilton's debt plan ultimately succeeded in its central goal, to establish the financial stability and credibility necessary for the United States to become a global economic power. He had created a financial system that could endure the test of time. As the United States moved into the 19th and 20th centuries, Hamilton's financial principles continued to be influential. They played a crucial role in helping the country manage crises such as the Civil War, the Great Depression, and the financial challenges of World War II. The infrastructure he built allowed the U.S. to expand its economy, build global trade relationships, and eventually become the world's leading economic power. In the end, Hamilton's plan wasn't just about managing debt, it was about building the foundation for the future. It was about creating a financial system that allowed the United States to grow, innovate, and become a force in the world. Today, Hamilton's legacy is everywhere. From the Federal Reserve to global financial markets, his influence can be felt in every aspect of modern finance. Hamilton's debt plan showed that with vision, boldness, and a little bit of political maneuvering, a nation could build its credit from nothing and rise to the forefront of the world stage. Without Hamilton's foresight, the United States might never have gained the financial strength and credibility that allowed it to play the leading role in global affairs. Hamilton may have faced criticism during his time, but his ideas ultimately helped shape the U.S. into the financial powerhouse it is today. And so, the next time you read about financial markets or the U.S. dollar, remember this story. It was Hamilton's revolutionary thinking and his debt plan that set the United States on the path to becoming the economic force it is today. His story is one of vision, struggle, and triumphal lesson in how sometimes building credit is the first step to building an empire.